Yesterday, Carl, was a very discouraging day for a lot of people who have been chasing momentum. Because last week was maybe one of the best momentum weeks I can recall since 1999, which meant that if you bought it, it went higher. And how much fun is that? Yesterday was the day that you bought it, it went higher, and then you got crushed. And so I think that usually takes a couple days of reset, where maybe you go after stocks that aren't as hot, say, as Tesla. So you would focus, say, on something like the banks. I've been through the banks, and I know Dave and I talk about this all the time. They're incredibly complex beasts. They're not like, ooh, Tesla hot. And when I first went over them, I thought they looked pretty good, but already they're reversing. And this is not an uncommon pattern as people find one line or two line that they don't like, and then they sell these stocks. David, it's happening once again. You know that these banks could have been littered with bad loans. It's not. They have great trading. They go up, and then they spent the rest of the session going down.
I feel like, to your point, I feel like we see that often on earnings day, that same pattern where there is an initial positive response to what appear to be at least top line beats to a certain extent. When I talk about, I mean actually revenue and earnings exceeding analysts' expectations, Jim. But then you get deeper in, whether it's the reserves, whether it's the commentary around the quarter and what is coming. And we're going to be getting that now from JPMorgan's call, I think, started at 8:30. Wells Fargo's a bit later. Citi. And that gives investors pause. And then the reserve builds. I mean,
right.
They're very significant. Now, we knew coming in capital markets activity was incredible, and that's reflected in the numbers. We knew trading would be strong. That is reflected in some of the numbers. What we didn't quite know is where were they going to build and how much would they, Jim? And, again, early days here. By the way, typically you want to wait until you actually see the Q because there's a lot more information in there than is in these press releases to really understand what's going on at these banks.
Well, I'll tell you what's amazing, Carl. People keep saying, you know what, I don't want to buy those expensive stocks. Who's going to go out there buy Netflix, Spotify, double downgrade? But here you got a bank, Citi, okay? Now, Citigroup has a tangible book value, which is actually, if you close the bank, I know you're not going to, but if you close the bank, it's what the bank's really worth. The tangible book value is $71.50. This stock is at 51. That is the definition of cheap. Of course, they're not allowed to buy back stock or be additive. If you want cheap, come and get it. You get a 4% yield. They don't want cheap in this market. They don't want value in this market. They're just waiting a few days before they come right back and start taking up FANG again. And that is what's going to happen.
Yeah. Well, I mean, others would argue, Jim, cheap for a reason. Kayla Tausche this morning pointing to this Goldman poll of a small business saying that 84% expect their PPP money of small business owners to run out in the first week of August. We know what's going to happen with CARES Act funds at the end of the month. Maybe that's one reason why the first JPMorgan call this morning said we are preparing for a more protracted recovery.
Right. At the same time, Citi was talking about how that only about 6% of the people said, listen, we'll take advantage of your forbearance plan. And then only half those people actually did. I was quite surprised at that. But then again, you're being paid to be at home right now more than if you're working. And about PPP, I think that the idea that it might be over is going to be wrong. That's where I think the stimulus is going to come. Because when it runs out, there'll be more until we get a vaccine. And now people may say, well, Jim, when the hell is that going to? I don't know. But they can't afford to let it run out for exactly what Kayla said, because the numbers would be awful if it ran out.
But, Citi's numbers, Jim, to your point, are certainly interesting to look at. End-of-period loans, $685 billion, largely unchanged from the prior period. Deposits were up 18% from the prior year. $1.2 trillion in deposits as of quarter end. As you pointed out, book value $83.41, tangible book $71.15. And again, they did increase significantly their allowance for credit losses. They're now at 3.89% of total loans. They had been at 1.82% of total loans in terms of what their reserves represent as a percent of that number.
People are paying their bills. And I think that is something that is my takeaway of this morning so far. Even Wells Fargo looks like they're paying the bills. Now, Wells Fargo is a conundrum, Carl, because most people remember this as being the best-run bank. Charlie Scharf is a great banker. He's got a very great pedigree, Visa. He was banking in New York. But, I mean, he comes out and basically says, don't own my stock. You don't want to touch my stock. Someone, Melissa was going back. Melissa asked an analyst, "Is it a contrarian play?" And I look at it and I said, "Well, let me check with Charlie Sharp, the CEO." Oops, no, don't buy it. Now, if you want to come in and buy it, you don't really have Charlie's blessing. I always like it when the CEO likes their stock, but maybe this is just one of those rare occasions because he bought a ton of stock at 28, and it is no longer at 28. Yep. You can buy it less than he did, but this is not the Jamie Dimon called shot that we all remember.